Hello, welcome at smarthelping.com. We have a fully upgraded mobile home park financial model. This is the third major update. This has gone through, and the latest version, I've added in an entire financial statement suite, which is cash flow statement, balance sheet, income statement, monthly and annual. Also, huge with mobile home parks, I've added a depreciation schedule here where you can define um, logic for each park. This model allows you to simulate a basically the financial performance over 16 years, monthly and annual, of acquiring and or developing up to 40 mobile home parks, all in the same timeline. It's one of my ultra level models. I've only got like 3 of them, and I define that by the amount of time it took to build, the amount of complexity, the difficulty to repeat, and so this is going to cost a one-time fee of $175. So let me go over the model with you. I'll go over each tab and explain how everything works. First tab here is control, and this is where you can define the start year, the exit assumptions, and this exit assumption, if you can pick any exit month or pick NA to not show an exit value at all. And if you pick any month here on that month, it will apply a cap rate and any seller fees, prepaid penalty to based on exit cap and all that, it'll show total sales proceeds. There will be taxes accounted for, and based on depreciation and percentage down here defined for what's total proceeds versus what's applied to property, you'll have a net gain or capital gains loss, and then the rest will be taxed at the regular tax rate for operating income. So this will apply. It assumes you exit everything all at once whenever that month is. So you kind of build up, build up, build up, build up, and then at some point in the future, you exit all the parks. Um, Now, each park individually has its own assumptions, which you'll see here for the start month, when revenue starts relative to the start month, because this could be like development and then revenue doesn't start for a bit. So there's timing there. You've also got acquisition assumptions. So if you're acquiring one of these parks, you could do the current NOI, the entry cap rate, and the resulting acquisition price. You can also put in here some construction or development costs. You could have this all the costs in development or here in acquisition or a split. It's designed to be flexible. And based on if you're going to fund some of these acquisitions with debt, you can hit yes or no here. If you hit yes, it's going to use the first initial loan term assumption, the LTV, meaning you can have an initial loan. It can have an interest only period, interest only rate, and then also after that it'd have regular amortization. So that's all dynamic, and it happens all over on the amortization schedule here, and it's different for every single park based on what the park details are for entry. But these assumptions for debt apply to all the parks individually on their own timelines, and this is all aggregated into the same financial model. That's why we have you can see on the monthly detail this will have the activity for all the parks going down 1,000 rows because we've got every park in here. So loan terms, then you can also define if within a given mobile home park, if you want to do a refi. If yes, you pick at what year you're going to usually do that at, what the LTV is, and then based on the net operating income at that point, you'll get a refi value that will have a regular amortization, term, uh, interest rate. You've got a refi cap rate here, and then if there's any lender fees or prepaid penalty fees, you can put that in. If new construction, you could actually also put in the amount financing through bank. So this will apply to the initial construction cost, what's going to have to be required by equity. Basically, that applies to this column here. You can see that logic happening in that string. So and then we have company name here, which will just go on the income statements. And then finally, this could be a single operator Or you could have a joint venture. If it is a joint venture, you can put in the percentage of equity requirement that's going to come from the GP versus LP. And then at the end, you'll see there's 3 different waterfall options you can use. This is just a general three-tier IRR hurdle split. We've also got a preferred equity hard. This is hard preferred equity split with a preferred return. And then we've got just a preferred return where this is a little bit different, where you've got equity contributions, and then you can define a preferred return, and then that's not preferred equity. So that means you just get 10% of the investor will get 10% on their investment, but it's not a claim on equity. So then after this is returned, the cash is split based on this percentage here thereafter. So these are all different um, waterfalls you'll see. At the bottom, it'll show the summary of the LP and GP based on the waterfall tiers and what these percentages are up here. And this all runs dynamically based on the assumptions. Uh, we've also got plenty of visuals for each cash flow summary type. So soft preferred, hard preferred, preferred return. Some nice visuals here on net cash flow, all equity, net operating income versus debt service, total mobile home park count. We've also got debt summary. So this is kind of cool to see the fund sources. So this is taking money out. Then you've got cash from the refis as things get refied, and then principal repayments happening. Cumulative debt summary, project cost, acquisition versus construction renovation, and then your final IRR and equity multiple summaries for a sponsor investor based on using option 1, 2, or 3 of the waterfall structure. So really cool stuff here. This is one of the best templates I've built out of the box, and I've had great reviews. I've had people in the industry 20 years say that this was the best out of the box mobile home park model they've ever seen. So only positive reviews, and all I've done now is made it better with the income statement, balance sheet, cash flow statement, depreciation logic. So if we continue on here, so that's all the control tab. We go to build out. You can put in the park name, start month. I already kind of went over this part. If we scroll to the right, you've got funding sources, you've got revenue growth. So this could actually be applied to if you have park-owned homes and you're renting them all out as well as charging lot rent, then what you would do is put your total unit count here and you put your weighted average lot rent. If you were also renting out park-owned homes, you would factor that into what this is. But the main thing is your total rental revenue to start or maximum based on the unit count should be, column O times column N, whatever that might be. And then there's some logic here to grow the lot rent in the first 2 to 4 years, as well as the stabilized growth over the long term. You've got initial occupancy, you've got improvement in the occupancy, and then the stabilized occupancy, which will all drive revenues for each mobile home park dynamically depending on when it starts. Then we've got costs, so you can just define OPEX here. We've got, 17 fields, um, which is just your fixed operating expenses, and that can be different for every single mobile home park. You've also got the annual expense growth here. I did add a module for other income, and so that'll apply to each park individually depending on what that number is. Depreciation, this will fill in based on the total price acquisition plus any development, and then you've got useful life here. Or if you want to dynamically, I know there's a lot of depreciation factors that can happen with these things, so you can manually fill in these boxes on when you're taking depreciation, and it will flow into the income statement dynamically. Or you can just use this and say it's even amount over X amount of years, and then this will the model will pull on the exit how much of the initial cost basis is left, and that will be used to determine capital gains, profit or loss, and taxes therein. Okay, so here's the first big tab upgrade. We've got income statement. You've got revenue, so other rental income, other income, total potential rent. Vacancy is it's not really a cost of goods sold, so I put vacancy here because you're not actually making this, you're making this minus the vacancy. So you've got gross rental revenue, then we've got all the OPEX of everything. And this is again summing the monthly detail, which the monthly detail has a pro forma for every single park that is, and this is where if you want to see the details of each one, you could kind of go here and scroll down and look at it. And it's got all the factors for each one. And then at the bottom, it's got the aggregate effect of everything that's going to show up in cash flow here and resulting equity distributions, contributions. All right. Let me scroll back up here, put this back to the top. So income statement is where we OPEX, then we've got operating income or EBITDA, then we've got interest, depreciation expense, and then we've got all this logic for sales, for taxes, which is really, so taxable operating income is going to start once we start making a profit. You can see that happens essentially not till you stop building out things, because then the depreciation slows down and the revenues or operating income picks up. So here you finally at a net profit, again, even with depreciation. So we've got some taxes here on operating income, which is this. And if you scroll all the way down, you can see when there's a sale, you've got total sales proceeds, you've got taxable operating income, and and then the total sales proceeds is broken into sales proceeds assigned to other income and sales proceeds assigned to fixed assets, and then the gain or loss on the capital gain or the fixed asset sale, and the resulting taxes on that, the resulting taxes on the other income portion, and the resulting taxes on just general operating activities. So all that aggregates in whatever month is determined to be the exit, and that's all. This will change dynamically. You know, if I change this to exit in, let's say, November, or say I only wanted to run a 5-year or a less than 16-year, that will update. And you can see here, now we've moved everything up 1 month automatically just by flipping that switch. So pretty cool logic here. Some of the best stuff I've ever done. Let's go back over. All right, income statement annual is the same thing as a monthly, just on an annual basis, but same logic here. Everything works the same. Here's our sanity check. Note the global control does have sanity checks in the bottom part here that make sure all of the balances equal, and these should always be zeros across the board. And it just means that all the activity happening on the monthly and annual matches the cash flow statement, income statement, balance sheet, and all that balances, and also the waterfalls all match that. And they all have to be the same because it's the same data, just represented differently. Next up, balance sheet. So we've got cash, the property assets, accumulated depreciation, total assets, liabilities, which is a big one here. If you're doing a lot of financing, you're going to want to know the debt balance over time. We've got equity contributed, common stock, retained earnings, the total owner's equity, liabilities, owner's equity, and total assets. And obviously, assets always equal liability plus owner's equity. So there's our check there. You see that works out even in the end. Then in the end, since we're doing that sale, we zero out the property, we zero out the accumulated depreciation, because that cash amount is going up by that sale. Zero out the debt because we're assuming all debts paid back on the exit unless we hit NA in the exit month. So we're all balanced out there on the monthly. Annual balance sheet, same thing, but on an annual basis. And you'll see, you know, I live streamed the building of all this, and it was definitely a task, but it turned out really great. Then you got cash flow statement monthly. So this is showing you all your operating activities, investing activities, and financing activities for each month, all the way across. You see there's our exit values, taxes, principal repayment. All this stuff is all in here nice and neat. Cash flow annual, same thing, but on an annual basis. Then, like I said, the monthly detail and annual details show the individual mobile home parks, their operations on a granular level. I also put this MHP detail, which kind of lists, here's all 40 parks. And you don't have to use 40 parks. You can use this for 1 park, 5, whatever. Just fill in on the build out assumptions. But this is showing 40. Here's your net operating income of each, initial cost of each, initial loan amount, refis, total debt service over time, exit values, and then net cash flow. And remember, this is taking out taxes too. So this is net cash flow before tax, and the internal rate of return of each park, and then net cash flow after taxes, and the internal rate of return of that. And then, like I said, the waterfalls, I already explained those, but they're all linked into the assumptions, and then visuals we went over as well. So that's the whole model. Mobile home park, if you're looking at mobile home park, scaling, building in, or getting into a couple of them or more than one, or even just one, this template is great. You can also use this if it doesn't have to be a mobile home park. These could be apartment buildings. This could be a multifamily um, property. It could be all kinds of things. Just basically, it's following the logic of having units with rent that can increase over time in OpEx, and then you've got your acquisition structure here. So it's not just, it can be used for other things besides mobile home park. It can be used for other real estate um, simulations. So I think this is a really, really, really great template, and hopefully you guys find out the same. I am happy with the upgrades. If you want to purchase, again, it's $175. Check out the link in the description box. It'll be up at smarthelping.com under the industry specific models at the bottom. Will also be listed on Eloquent and eFinancial Models. All right, guys, I'll see you on the next one.